Trucking is considered an essential business and therefore is exempt from virtually all mandatory quarantine situations. Using this fact as the basis for negotiating government programs and benefits is and will always be subject to at least some form of interpretation. We cannot guarantee the application of any benefit requested, but it doesn't hurt asking or applying. Up until about April 8th, I decided not to produce a video explaining the programs because as of that date, on government website, it appeared that virtually nothing applied to the independent operator industry. However, times changed. There are 4 programs: the Temporary Wage Subsidy, Emergency Wage Subsidy, the Canadian Emergency Relief Benefit, and the Canadian Emergency Business Account. Warning: abuse of these programs can result in fines or penalties of up to 225% of any benefit received. At the time of this production, abuse has been defined or advertised as anyone who claims both Program 2 and 3, the Emergency Wage Subsidy and the Canada Emergency Relief Benefit. We cannot determine if the rules will be changed further. Maybe people think that dealing with CRA is an absolute science. It's not. At times, especially in the COVID-19 programs, it may have unique assumptions applied to it, but we also trust it will have some form of consistency. The 4 programs all have numerous and various qualifications. We have summarized them for you as it applies to most independent operators. So, let's go through each program. Temporary Wage Subsidy, or 10% of wages. I believe that the vast majority of our clients should qualify for this program. The qualifications is an active payroll account as of March 18th, 2020. Simply put, it's 10% of last month's gross wages. Now, we are including non-taxable benefit because how we read the allowances, it does say to include them. However, this may be subject to an auditor's interpretation. This 10% total is calculated as a taxable wage subsidy with a maximum of $1,375 per employee. Let's use an illustration. $1,000 a month salary plus, say, $2,000 in non-taxable benefits at 10% is $300. This subsidy reduces your next month's source deductions by $300 for the next 3 months. If you have a management bonus before June 18th of 2020, you can include that gross into your subsidy calculation. So, if you declare a $4,750 bonus in June, above your $1,000 salary and $2,000 non-taxable benefit, you will save $300 in April, $300 in May, and $775 in June, or a total of $1,375, the maximum allowable. If there are 2 employees, the amount is doubled. Remember, the subsidy must and will be claimed as taxable income in your corporation at your year end. We will do all the calculations and submissions for you. We will also contact you if you are short of the maximum allowable. Though it does represent a great deal more work for us, both now for the next 3 months and early in 2021, we will not charge you. This is a cash benefit, money in your pocket. However, we can't guarantee its final acceptance. We are pretty sure that this subsidy calculation is accurate, but so far, the rules keep changing too much for me to be 100% confident in the future. Please contact us if you wish us to apply for you. Due to this much higher workload per client, we hope you can accept that filing your other returns may be slightly delayed from the normal year. The 75% Canada Emergency Wage Subsidy, CEWS, is very different from the Temporary Wage Subsidy. First, you can claim both, but the benefit of the temporary, or 10%, will be deducted from the benefit of the emergency, or CEWS, or 75%. So the temporary becomes irrelevant. In my opinion, most of our clients will not fully qualify for the CEWS. Only those who have significant drop in revenue, 30% or more, may qualify. Most of our clients have not experienced nearly that much drop. if any. In fact, some are working harder and making more money than they have in years. The amount of documentation and defense required to qualify is substantial. For example, you must provide documented evidence that your revenue dropped 30% because of the COVID-19 virus, as well as documenting your pre-virus payroll as the 100% standard. Herein lies some of the problem. As an essential industry, finding a drop of 30% will need to be defended consistently month over month using the same method of calculation. So if your income drops in one period but returns the next, it may weaken your argument that COVID-19 caused it, and you may be required to return the money. Without a doubt, some operators have lost big time, such as auto parts dealers or haulers, should I say, or delivery drivers to restaurants. But most long-distance operators, in my opinions, will have difficulty justifying their application, especially if you supplement your wage while others at your carrier didn't even drop in revenue. If you can prove that you are dramatically affected, this may well be an option for you. However, if you have to massage your numbers to make it work, you may be heading down a greedy street, and auditors could even apply penalties that cost you significant cash. If there is a client who wishes to pursue a claim and we agree to work with that application, there will be additional charges for the additional work. The limit of your claim is the lesser of 75% of pre-crisis wages, or $847 per week, $3,388 per month, or $10,164 over 3 months, provided the revenue remains depressed. Remember, it's the responsibility of the employer to defend their drop in income period over period. There are various formulas for this, but the bottom line is, if your income returns, you automatically lose your subsidy and may even be required to repay it if it's deemed non-COVID-19 related. In this program, there are also some non-arm's length restrictions. Since the owners are the only employees, the relationship is classified as non-arm's length. The program is designed to keep employees being paid, not necessarily working. Sending someone home claiming it's because of COVID-19, then paying them, all must be justified, every period. The subsidy only applies to wages, nothing else. Most operators need to make their truck payments by driving, so they find work. If you think you would like to research this option beyond my opinion, I refer to our website and the attached copy of CRA's description. The application must be applied for through the My Business Account portal, and some of the application process has not even been developed at the time of this recording. There is another alternative some operators have chosen to use. It's an all-or-nothing approach, basically firing or laying off their spouse or even themselves and collecting the Canada Emergency Relief Benefit, Program Number 3. The CERB provides up to $500 per week or $2,000 a month for those who get laid off due to the pandemic. By far, it is the easiest of all the benefits to collect with virtually no documentation other than an online application. However, someone must stop working. Also, due to the non-arm's length status of firing a shareholder or director or a spouse, it may get people into trouble when CRA audits the application for compliance, if they do. It's easy, but it may also have to be defended. The Canadian Emergency Business Account, the fourth program. Basically, this benefit is an interest-free $40,000 loan with some qualifications and restrictions. If qualified, up to 25% of it can be forgiven. That means you may only have to pay back $30,000 of the $40,000. Not too bad if everything goes according to plan. Different lending institutions may require slightly different terms, so you got to look into it. The qualifications are that you must have to have a payroll that grossed $20,000 or more in 2019. The vast majority of all of our clients qualify for this program. It is designed to pay for general expenses of your business during the COVID-19 crisis. Two general things to understand. First, it is interest-free until December 31st, 2022, or in about a little over 18 months. Second, it may not be payment-free for that entire time. You must follow the rules. For most institutions, if you have not paid 75% of the loan back on or before December 31st, 2022, you will not get the balance forgiven. This means you have to time your payments according to their schedule to maximize your debt forgiveness. Remember though, this is a loan. Most institutions will work to extend the loan beyond the December 31st, 2022 deadline, for a fee of course. Find out from your institution what terms they are providing. Personally, I believe this loan can be a trap. It must go to pay operating expenses, yet it must be paid back. Financial success can be defined as debt-free living, not playing with easy credit. My suggestion is make sure you have the full $40,000 available to repay before Christmas 2022, or don't do it. These four programs all have advantages, disadvantages, qualifications, restrictions, and even deadlines. Please email us regarding the application for the temporary wage subsidy if you wish to apply. We will immediately start the process for you. If you have any further questions or concerns, please email me.